Good on you, Sal. Well, let's stay with this. Cornelia Meyer is Chief Executive, Meyer Resources, and joins us. And a familiar face. Cornelia, great to have you. Great to see you and have you with us in the studio. Okay, so they've agreed to agree, right? Let's put it that way. But can I just say this, and Sal, you can come in too. And I think this is a bit of a big whoop, isn't it? Because you've got, at a time when Russia is breaking records, producing more than 11 million barrels a day, you've got Iran getting back up to speed. 700,000 is not going to do much, is it?
Well, 700,000 is not going to do much, but what is significant that they were able to at least have an in-principle agreement, which, as Sally has said, has not happened in about 8 years. But it also has not happened by design, because they wanted to ease out sort of the shale producers and get the people who had a higher cost of production a little bit out of the market. So yes, it is, but it will be very hard between now and the meeting in November for all the countries to really agree on their individual quotas, because it is not just Iran that wants to up production because they came out from under sanctions. It is Nigeria and Libya who have come from out of under internal strife and want to up production again, and Iraq is trying to push production up.
Have they, is it fair to say that they've reached, we say, oh yeah, they've reached a deal. They've reached a deal because Saudi wants to play ball now, because Saudi's plan to knock off these American shale producers and frackers by keeping the price low has backfired on Saudi Arabia. Saudi Arabia has been dipping into its sovereign wealth fund to fund its budget. Just what we had a story yesterday, was it the day before? Yesterday, I think. The Saudi ministers are having big pay cuts. Saudi's in trouble.
Well, I'm not sure that Saudi is really in trouble. What you always see when the oil prices go down in the Kingdom of Saudi Arabia is they suddenly start to have the right policies. They stopped the ridiculous, subsidies for fuel, so it's becoming less subsidies. Some pay cuts are good, so they're starting to act a little bit more like a normal economy, which in the long run is probably a good thing. You also have to see that the Deputy Crown Prince, Mohammed bin Salman, is trying to wean the country a little bit off oil and try to get other industries to have each other deal. Yes.
Some are saying, it's kicking the can down the road. We've got till November the 30th when this deal has to be done, as it were, for it to actually happen. In the meantime, what will happen with the price of oil? Are we looking at now price of oil being above $50 a barrel in the future, maybe towards 60? What's your thoughts?
My thoughts are for this year. I mean, this has gone up way too fast overnight, and it will come down some. I would say we'll be around between 45 and 50, maybe a little bit above 50.
That's key for the shale producers,
That's
isn't it?
key to the shale producers. But I think next year you will see the price go up, because next year, at some stage next year, there will be an equilibrium in the oil market of demand and supply. And watch out for 2018, because the oil price was so low, especially the international oil companies are underinvested. The oilfield service companies are underinvested. And at that time, demand is up. They can't produce more. The lack of investment will have worked its way into production, and it's not like a light switch. You can't just turn the tab on. So watch out for 2018, when I really see oil prices 60 and above.
All right.
Okay.
We will hold you to that, Cornelia.
We'll
remember.
Great, do so.
We'll be punished if it doesn't come true. You know that, right? Cornelia, thank you. Cornelia Meyer joining us.
She likes a challenge.